Your Excellencies, good morning again and welcome to the debate. What I propose to do is to lead the discussion on the global oil market by asking you a few questions before I open the debate for questions from the floor. And if you don't mind, I will ask these questions from here. And to begin with, a question on the health of the world economy. Any understanding of where global oil markets are going must be underpinned by assumptions about global economic growth. Conventional wisdom would have world economic growth returning to pre-crisis levels in the near future, while other economists wonder instead whether the world is moving into uncharted territory in which slower growth may become the norm. Will we ever return to long-term world growth averaging above 3% in real terms? Who wants to take the question first? Abdullah?
Okay. Well, good morning to you all. Thank you, Mr. Chairman. Good morning to you all. Let me go on the record that we have no quarrel, we have no problems with the IEA. We are friends. We try to compare our record together, and we are not really far away. Even though they have different objectives, we have different objectives. But at the end of the day, I think we are managing to have the same understanding. For your question, it is $1 million question, but I will try to do my best. First of all, there is positive and negatives. You know, if you go back to from 1981 to 210, the growth of the world is about 3.4. In 2012, we forecast the growth 3.1 and IEF 3.3. For 2013, we forecast 3.2 and IEF 3.6. So on the average, there is about 3.4. Now, we have to look at the challenges. The big challenges that now we are facing is the U.S. physical cliff. This is a problem. But I'm sure the Americans work on it. I'm sure that it will be solved. And the Eurozone. Eurozone is really debt crisis is a problem. And they are working on it too. And they have, I don't know if they will be able to solve it, but at least partially. But what is positive is we have too many countries that are trying to solve this problem, not individually. All of them, they are getting together and try to solve this. We have the geopolitical problem in our Middle East. It is there. It has been for so long. I hope that there would be a solution. But the market is very well supplied. There is no shortage of oil anywhere in the world. You know, stocks are very high. Forward coverage 59 days, which is plus 2 days above normal. And OPEC, we're supposed to produce 30 million barrels a day. We are producing 31 million a day plus. And we have spare capacity. So you really don't see why we have this high price. I think I am always say it, I will say it, even if stay in OPEC or not, but speculation is the problem. Like if you go to July and August, the net long position increased by 80% to 300,000 contract. That's meaning 300 million barrels a day, 3 times the physical demand. So we really have problem. We have to solve it. But at the end of the day, I think we can. In 2013, 2014, we can reach an average of 3.4. It is not as high as everybody wants, but it is a moderate growth, and I think we can live with it.
Abdullah, we have a few questions on those subjects later on. Thank you very much. Maria, would you like to add something? please stick to the economic growth issue rather than the market. We have other questions later on.
I've got some other messages to send. But let's stick to the economic growth. I would like to underline what Abdalla just mentioned. There was once a war between us, wasn't there?
Yes.
But we don't like that.
But we don't fight.
We don't fight.
We don't talk.
And if we are fighting, we do it in private, not before the public. So, but I think it's important that producer and consumer countries, that they, of course, they are coming from a different angle. And that's why we need Aldo to bring us together in the International Energy Forum. But the most important thing is, when we're talking about economic growth, that we can see the IMF, this now is a little bit downward, the forecast. We have foreseen that, and we use these figures in our oil market reports, in our medium-term oil market reports, and also in the oil market report that's going to be released today. And it's also important to see that, to underline that the call on OPEC from the consuming countries has never been unanswered. There was always the correct answer OPEC supplied. And what we can see now, when we look into your figures and our figures, you released your energy outlook just a couple of days before we did, we are much in line, because I think we use the same forecast of IMF, and we can see that there will be a need to, well, to bring the call on OPEC a little bit downwards, but not much in the next quarters. But the most important thing is that we have still some regions in the world where there is a big economic growth. Let's have a look at China. Let's have a look at India. Let's have a look at Indonesia. And don't forget about the Latin American countries. There is still economic growth. You can't just use a general percentage, because that's an average. And the average is always in the middle. And it forgets about what you justly mentioned, the position in Europe, but it also forgets about the position in China and in India. And what we can see at this moment, there's a huge demand for oil in countries like China and in India. Well, what about prices? I agree. It's important that market fundamentals determine the price. That's what we are all talking about, and that's sound market policy. But of course, there's sometimes always an anticipated risk or an anticipated expectation, what might happen. And this, I think, is not a very sound position, but it's there. As far as speculation goes, well, this is, I think we have a slightly different view on this, because we had some international surveys of that, and there's not a real how shall I put it, evidence of speculation on the long run, in the longer term. But of course, in the short term, there are always other things that influence the price. Just one thing more. We have seen prices going up and down in the past year, and it was 130, and then it came down, it went up again to 109, something like that. You made your comments on that. I think it's important that this price volatility, it's difficult. It's difficult for countries, and the moment that the amount you use for your oil is more than 5% of your GDP, well, then you normally may have a problem. But of course, what we can see now, that is that the market is well supplied. There was and there is enough more oil on the market.
Thank you, Mariam. Abdullah, you want to say something?
Well, I think, it's a very difficult, to commit, I think, I spent 35 years in this business. And after I left officially, but not physically, I start to ask myself, what I learned from my business. It gave me a very confused, When you talk about the economy growth, oil price, and producting, forecasting, I never felt, all this what, analysts or forecasters, coming to you and say and give you a presentation about 2 or 3 hours. Demand and supply, growth, negative, positive, and so on. And then you will, after this presentation, you will ask yourself, what will be happen in the oil market tomorrow? It's confused. So I think, in my opinion, I left with the new theory. Don't trust forecasters. Just if you want to be a more pragmatic, look to the oil price in the Platts and the Reuters. They will tell you what your oil price, or what they will tell the world how the demand and the supply. Sometimes you will see, as Mr. El-Badri say, every time in an OPEC, sometimes when we say, oh, this is the supply, the market is oversupply, the storage in highest level, and so on. So, but the next day we are seeing the oil price fluctuation from 9 to 5. And even you have to look and you ask yourself, what time now? It's 5 o'clock. Okay, London or Tokyo or so, this close the market list to check the oil price. So I think, today I can preach you for 3 hours about economic growth. And we can talking about the emerging market, about the European financial crisis, about the American economy and unemployment, and so on, so. And every time, it's really is very confused because the market is very psychological. It reflects even when US publish their unemployment rate or, a monthly, to reflect negatively or positively next day. So it's really, please, I think, even when we studied many, many years in the university about economics, about the demand and supply, after we graduate, after we work, I ask myself, what I learned from the university? Nothing. Because what all this theory is not reflected to the pragmatic work, So I think, today, we need, we always talk about we need a transparent, information. Yeah. My good friend from IEA, I think I'm very happy today to see a Dutch coming to the IEA. At least she understands business. I worked with her when she was a minister. She was very, very smartly. She asked me to be observer at the gas organization. And she is very active, in the way. So she coming from a country that is a mixed. So she can understand the business very well, even better than the befores. Yeah. Even when you create the IEF, my good man from Mexico, we created just because to want to build a bridge between all the ages in how to that we bring producer consumer together to bring a transparent information that we build our statistic and our. But unfortunately, everyone trying to hide the information, is not true. So.
Shukran, Abdullah. Well, this is supposed to be a panel on the world oil market. You heard Abdullah says it's all speculation. And Abdullah Al-Attiyah says, don't believe forecasters. So
I can't prove it.
Well, Aldo, doesn't this worry you a little bit? Because in fact, what you're doing in IEF is to get the data, which you should give to the forecasters. I mean, the JODI now is about 10 years old, isn't it? And your job is to try to improve data collection and transparency. Can you tell us a little bit what you're doing and how are you going about it? And you making any improvement?
Of course. Again, thank you. Very happy to be here. One thing to keep in mind about the exercise with respect to JODI, the Joint Organizations Data Initiative, is that it was born to address the challenge of volatility. And about 11 years ago, this challenge was understood differently from the way it is understood today. It was indeed an issue of transparency in the reporting of market data, but we didn't have, for example, then the financialization of oil markets that we're now observing. I'm bringing this up because we have been working on the transparency on its own for variables that have to do with the production of oil, but the market is shifting with gas playing a bigger role. Now we're thinking about transparency with respect to gas. But if you think of what happened in the last few years and this debate about speculation, it's really about expectations. So we're also working now with the IEA and OPEC on energy outlooks to understand how this forecasting or these estimates are being done. So moving to JODI. JODI has made a lot of progress. It's still a work in progress. There were 50 countries that first joined in this initiative. Now we have 90 countries. We have a coverage for the oil market that approaches 80% of demand, a slightly lower percentage of supply. We are now providing monthly information that wasn't there before. Very significantly, 10 years ago, if you were looking for information for non-OECD economies, it would have been very difficult. Countries that are now driving growth in the oil market were not present in that exercise, are now present there. So JODI, through this joint exercise of 7 organizations, the IEF, IEA, OPEC, OLADE, APEC, the UN, and Eurostat, has been improving the coverage, the breadth, and the frequency of reporting of this type of information. But we have obstacles that we have yet to address, and I must say that this is a key challenge. We're moving on the supply side of the provision of information, but we also need support from the demand side, from those that are consuming the information and using it to make forecasts. There's a strong commitment from the countries that participate in JODI and the organizations that participate in JODI. We would like, and this is an invitation, that those that use JODI data also contribute in this effort to make sure that it is much more available and a much more useful database.
Thank you, Aldo. I think you heard both Maria and Abdalla Al-Badri agreeing on the fact, at least, that the oil market today is, say, well supplied, at least in the short term. OPEC is producing almost 1.5 million barrels per day above its own target, which it set last December, in spite of lower Iranian exports. OPEC has still about 3 million barrels per day of spare capacity, and I think everybody agrees that global inventories are at least, adequate, more than adequate. Yet, prices remain stubbornly above $100 a barrel and show every tendency to move upwards. Now, if market fundamentals, which Abdullah Al-Attiyah and I were studying at the Economic Commission Board 30 years ago, supply and demand, stocks, and so forth, okay. If market fundamentals no longer have an influence on prices, at least in the short run, shouldn't government, particularly the IEA or agency like the IEA and OPEC, be developing policies to deal with expectations so as to strengthen the role of market fundamentals on the process of oil price formation? Abdullah, OPEC only tool to deal with prices is to move production up or down. That's the only tool. But if market fundamentals do not have much influence on the price, then what can OPEC do in addition to moving production up and down? OPEC keeps telling us that all of it is speculation. Now, is OPEC considering anything else than speculation to try to deal with this problem?
Let me tell you, speculation is part of the market and nobody can eliminate it. Excessive speculation, that's what we are talking about. Now, as I said, if the paper market is 3 times the physical market, that means there is something wrong. So OPEC is not asking to eliminate the speculation element of the market. But I'm sure everybody knows that the market is, and I repeat, the market is very well supplied. There is no doubt about it. The stocks are very high. at least the commercial stocks that we are seeing from the OECD countries. Of course, there is the stocks in India, there is stocks in China. Now they are building, so there are worldwide there are more stocks than ever in the market. But neither the IEA nor OPEC is here to set policies. Policies belong to the government. I think they recognize after the 2009 that there is a problem, and this problem must be tackled. Now there is some laws now they are trying to implement. It is in progress. It will not come in a day and night, but you know, day by day, year by year, I'm sure, year by year, I'm sure this will be eliminated. But Ayat Hussein, you cannot really eliminate speculation of the market. As I said, and I want to repeat, in July and August, net long position increased by 80% to 300,000 barrels a day, and that 300 million barrels. Now, this is 3 times the physical market. Okay. Do we need a paper barrel to be more than the physical market? Yeah. So we are looking to eliminate this excessive speculation. But OPEC is not looking for high price or low price. We are looking for a moderate price. It's not in our interest that the world economy will be slower or will be damaged by high oil price. It is in our interest that we have a wealthy economy.
Shukran, Abdullah. Maria, I remember about 4 years ago, the IEA launched a big study to try to determine, what is behind the oil price formation. Is it speculation? Is it fundamentals? Is it something else? And the conclusion was, this is a very complex issue. There are many, many drivers that make oil prices, but telling which one does more than the other, we just don't know. Has there been any improvement on the thinking of IEA on this? What drives oil prices?
Well, I think you answered your own question. There are many drivers, and it's also important to realize that IEA is not a price forecasting agency, it's not a price setting agency, and it's not a price reporting agency, as there are others to do that. And I think it's very important to have a transparent market where market fundamentals can really play their own role. That's important. And of course, there are policies of governments that might influence the market. And of course, there are expectations. And sometimes it's also an anticipated risk that is reflected in prices. But it's very complex, and I think one of the most important items is to have this transparency. Because the moment you have transparency, it will also lead to a transparent and stable investment market. And that's something else I would like to touch upon. This is part of the job as well. It's not only about the price of oil, it's also about necessary investments. And both are really in both cases, transparency, as is tried by us in JODI, is very welcome. And I would like to call upon all of you here to give us the data that are reliable and that are up to date, because our work on JODI relies on your data and on the data of governments. And if they are questioned, or if they are not in time or just not given, well, then we can't work.
One last question before we move the debate into the floor. ما تطولش ها؟
Speaking of investment, from 2012 to 2016, we have 116 projects, and we are investing $270 billion. Our net liquid will be about 5 million barrels a day. So OPEC is really investing a lot of money, even though we don't see, the oil market very clear, but we are investing. It is part of our obligation that we keep the market very well supplied.
Okay.
Nordine.
No, I would like just a few minutes, because when my job is transparency now.
Yeah, I was just going to ask you, what is transparency in Qatar?
Now today, Maria, she said about, transparency, the word need transparency. I think this is only, in a theory, the word is talking about transparency without even adopted. See what happened now in the financial sectors. Every day we hear, this bank, this big bank, this big names is cheating, is interest, is, covering the, Today, who will make the transparency? I think, in my job now is how to challenge. Today, Qatar, for instance, is number 21 in the whole world. Number 1 in the Middle East. We are better than US and France. But my challenge, is to bring Qatar in the top 10. How we can make it, we will try. But I cannot believe today the world has a transparency. I cannot just use this word, just they throw it, politicians throw it during the election, and they forget it again. People, they always talk about transparency. What it means, the transparency. There is no meaning. I like what she said. We discuss, or what you said, in your report that the IEA discuss everything, and then more drivers. And then I like your conclusion, or their conclusion.
Yeah.
We don't know.
We didn't know. Yeah.
So I think the word always, they don't know. This is the best answer. Because if they know, maybe they know, but maybe they cannot say it. Maybe they will not pronounce it. Yeah. So it's really the problem is transparency is the biggest of problems. And no one, everyone talk about it, but no one believe it in it.
Well, let me ask the last question. I think everybody is very much be interested in. I'm sorry to have to refer to supply and demand again, but if you look at supply and demand, and here again, IEA and OPEC agree, next year may not be a good year for OPEC. Demand growth is going to be very limited on both accounts, by the way. Non-OPEC supply continues to grow. OPEC, NGLs will show another increase. And if you bring all that together, you see that the call on OPEC oil is going to go down. I think you all agree here on this. Some by 500,000 barrels per day, some by a little bit more. What is critical is that the call on OPEC oil, i.e. what OPEC needs to produce to balance the market, is coming at a time where Iraq is going to increase production, as we all know. So there are some people who are start worrying. Are we going to see a collapse? Is OPEC prepared? Or are they just waiting for Saudi Arabia to cut production? So how do you see the short-term market developing? I would like really to give a chance to the audience to ask questions, so just a short question. How do you see the market going next year?
Well, now...
and will OPEC meet in December to talk about this?
We're supposed to produce 30 million barrels a day. We are producing 31 million barrels a day. It's 1 million above the quantity that we agreed on. But the price still on the range of $110 a barrel. Now, if you look at 2013, we see that the current OPEC will be in the average of 30 million barrels a day, and also 2014 the same thing. There is one element is coming into the picture that, and I am looking at history because I have not received information from my from Iraq. Now, if you look at the production of Iraq from last year to this year, there is an increase of 500,000 barrels a day, and the market is still absorbing it. Now, if I have the same pattern for 2013, I would say 500,000 barrels a day. So maybe we have more oil than the current OPEC. But let me tell you one thing. OPEC is not looking for a very high price or low price, looking for moderate price. OPEC always, when there is a crisis, interfere and take the right decision. And Iran is the best example of this. Prices went down from 148 to 36 barrels a day. We meet in Iran, we took the right decision, we balanced the market. By the way, the balance of the market is not for the interest of OPEC, it's for the interest of everybody. Because don't forget that when we have high income, the G7, they have more income than us. So everybody is making money out of increasing prices. So as a matter of fact, this year, the G7, they will have more income than the 12 member countries. So nobody is really arguing against high price. So, but I think the conference, of course, this is the decision of the conference. They will meet, but I have confidence. I was minister. When there is a crisis, we get together, we take the right decision. Thank you.
Abdullah. No high prices as long as they stay above $100, okay?
I would like to give
Mariam?
a very short comment. Yes, in the short term, you're right. But that will also help to improve spare capacity. So there is always another side to every medal. But let's have a look at the longer term. Iraq will be there. I see Mr. Shahristani sitting here. Iraq will be there. We did a very interesting survey on Iraq together with Iraq. And in the medium term, Iraq will come to the market with a lot of barrels. And the same goes for North America. And as we said yesterday in our World Energy Outlook, we foresee that North America will will be the biggest producer 2017, but not forever, just for a couple of years. And then OPEC countries come back. And I think we have to look not only at the short term, but let's have a look at the longer term. And the game changers are visible. And the game changers, that's Iraq, and that's the United States.
I know Abdullah would like to respond, but I'm sorry, Abdullah, maybe...
I just want to say a few things.
خلاص Abdullah ما طولناش.
No, wait.
I'm under strict instruction to ask people questions from the floor.
I just want to ask everybody, please give the positive message to the market. Please don't say that this country will overtake Saudi Arabia, this country will overdo this country, the shale gas will do this, because, and I'm telling you, if this message will keep coming, there will be no investment. There will be no investment in our member countries because they don't want to invest for something that they will not use because the equipment that they install needs to maintain them, need to pay to keep that equipment. Okay. If this will keep, then there will be no investment, and then the consumers are the one that they will lose, that there will be no more supply.
All right.
You can't close your eyes for reality. And let's have a look at the longer term.
This is
investment is long term.
I understand, right. but Maria, you have to have the right decision and the right message. I don't believe that the shale gas will have a big deal, you know.
We have a coffee break. You can carry on
okay.
outside.